Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Do you like paying taxes? Well, if you do, then you won't like insurance stocks. They have huge tax advantages. Insurance is by far one of the most tax privileged sectors. Many of their investment products are protected from taxes, and their earnings too are sheltered. So, as some small and large insurers like Star Health and Life Insurance Corporation get listed, it's time that investors familiarize themselves with the uniqueness of the insurance businesses and not treat them like just any other financial stock. Hi, I'm Tanushree Banerjee, editor of Equity Masters Blue Chip Recommendation Service Stock Select. Welcome to Safe Stocks, where we discuss ideas to create and preserve wealth in the safest businesses. If you haven't subscribed to Equity Masters YouTube channel yet, please do so and click on the bell icon to get notifications for my latest videos. Insurance companies don't have to pay taxes on the entire cash flow they receive as premiums. That is because only the surplus left over after the claims on the policies issued have expired is considered as income. Other kinds of businesses, including other financial entities, must pay taxes on the revenues and profits before investing. But insurance companies get to invest all the money first. This is a stupendous advantage. It's like having the freedom to invest your entire savings right up front and paying taxes on your income a decade later. But insurance is not an easy sector for investors to figure out. The financial statements are full of jargons, and in fact, they don't resemble the financials of any other sector. Secondly, the valuation of insurance stocks is a topic of debate. Metrics like new business adjusted profits or NBAP and embedded value are alien to most investors. It's no wonder insurance stocks did not debut on the Indian stock markets until 2017. And even today, just a handful of insurance stocks are listed, both life and non-life put together. Life Insurance Corporation's IPO later this year or early next year will draw a lot of investor attention to the sector. The insurer still has over 70% share of all life insurance policies sold in the country. LIC's asset base crossed 38 lakh crores, while its investments crossed 36 lakh crores in fiscal 2021. But what is interesting is the insurer's allocation of investable surplus. LIC was one of the biggest institutional investors in the Indian stocks when markets crashed in April to June quarter of 2020, post-pandemic. The company booked a record 37,000 crore profit from share sales in 2020-2021, the highest in its 65-year history. These facts alone make the IPO very enticing apart from its potential size. Similarly, Star Health is one of India's largest private health insurers with 16% market share in financial year 2020-2021. The company's primary focus is on the retail health segment, which accounted for 89% of premiums in the fiscal. As of September 2021, Star Health had 779 health insurance branches spread over 25 states. With nearly 12,000 hospitals in its network, Star Health has built one of India's largest health insurance hospital networks. Given India's low insurance penetration, such niche players have spectacular growth potential. Two public sector non-life insurers would also get privatized soon. However, the insurance stocks aren't getting any easier to analyze in terms of their financial statements and cash flow prospects. Nevertheless, it would help to familiarize yourself with few important business yardsticks of insurance companies. Remember, their profitability depends upon the success of the insurance actuaries in adequately calculating premium amounts. The company needs premiums that can generate long-term profit after providing for the liabilities as they incur. The insurance company's core revenue is the gross written premium, which in turn consists of the new business premium and the renewal premium. Higher new business premium growth indicates rapid business momentum. A parameter to judge the efficiency of an insurance company is the total cost ratio. This is obtained by dividing a sum of the total operating expenses, commission, and provision for doubtful debts with gross written premium. This is nothing but the reverse of operating margin that we have for non-financial entities. A lower cost ratio shows high operating efficiency of the insurance business. A common valuation metric for insurance companies is the embedded value. Life insurers are judged on the basis of the embedded value that they are able to create over a long period of time. Simply speaking, the EV or the embedded value is the current value of all premiums that the company expects in future from all the policies in its books as on a particular date. The calculation is complex exercise conducted by an actuary who takes into account probable exits by death, premium lapses, surrenders, maturity, and estimates the future income based on probable cash flows and likely rate of return on investments. Needless to say, vast variations in the embedded value of insurers makes their valuations more complex than other financial entities. Now, the prospects of select Indian insurance companies seems extremely bright. However, the yawning gap in their valuations versus global peers is disturbing. Add to that the low level of transparency in the reported profits of these entities. Therefore, while you may love to find an insurance stock as a permanent wealth vehicle to pass on to your children, I would recommend an alternate route. Like Warren Buffett's Berkshire Hathaway, I would recommend buying stocks that own large stakes in credible insurance businesses. Do we have such businesses in India? Well, HDFC Limited and Bajaj Finserv are amongst the few. You should, of course, be very careful about selecting only the insurance stocks that have the most credible track record in allocating the investable funds and buy them at attractive valuations. Carefully selected insurance stocks can be permanent wealth creators for decades. Hope you like this video. Stay tuned for more such videos on the safest and most appealing permanent wealth creating stocks. Thanks for watching.
Our new research uncovers some shocking truths behind today's hottest investment opportunity, electric vehicles. Don't invest your money in EV stocks before seeing our research. Click here to sign up for our special event to know it all for free.